Hey everyone, welcome back to Corporate Decoder. In this video, we will explore a fascinating shift in the financial world where a company is changing its calendar for reporting purposes. It might sound a little dry, but sometimes the smallest changes can tell a big story about a company's strategy and how it wants you to see its performance. So, what we're looking at today is a report from FS Credit Income Fund. Now, the big news here isn't about massive profits or sudden losses, but something a bit more administrative that could actually impact how we understand their yearly results going forward. They've decided to change their fiscal year end. Normally, when companies report their financial performance throughout the year, they use periods called fiscal years. Think of it like a company's personal calendar for tracking its income and expenses. Many companies align their fiscal year with the calendar year ending on the 31st of December, but some, for various reasons, choose a different end date. FS Credit Income Fund has decided to switch from the 31st of October to the 31st of December. This means their next fiscal year will be a bit longer, covering the period from the 1st of November 2025 all the way to the 31st of December 2025. After that, all their future fiscal years will also end on the 31st of December, just like most of us do. Why would a company do this? Well, sometimes it is about simplifying things, especially if most of their business operations or market activities are naturally concentrated towards the end of the calendar year. Aligning their reporting with the standard calendar year can make it easier for investors to compare their performance with other companies that also use the 31st of December year end. It can also streamline internal processes and reporting for tax purposes. Although no specific numbers are in this filing, this change in reporting dates can influence how we interpret growth or decline in revenue and profits when we look at year-over-year comparisons, for instance. A short fiscal year might make it seem like performance is lower than it actually is on an annualized basis. Conversely, a longer fiscal year can temporarily inflate reported results. This decision was made by the Board of Trustees, and it is officially documented by Stephen Sifford, who seems to be holding the title of General Counsel. This is the person who makes sure all these official company changes are properly handled. It shows that this change is a formal and deliberate decision by the company's leadership. Now, looking at this filing, it is important to remember that this is an 8K form. These are typically used to report significant events that shareholders should know about promptly. In this case, the significant event is the change in their fiscal year end. There isn't a detailed financial table with revenue and profit numbers in this particular filing because its purpose is to announce the change in reporting structure itself, not the financial results from a specific period. If we were looking at a 10Q or 10K, we dive deep into the numbers, but here, the story is in the operational change. So what does this mean for us as investors or observers? It means for the next report, and indeed any future year-end reports, we'll need to be mindful of this shift. When comparing FS Credit Income Fund's performance from one year to the next, we'll need to ensure we are comparing equivalent periods. For example, comparing their full fiscal year ending the 31st of December 2025 to their previous fiscal year ending the 31st of October 2024 will require us to do some mental math or look at annualized figures to get a true apples. To apples comparison, the main takeaway is that FS Credit Income Fund is refining how it presents its financial story. This change is aimed at improving clarity and perhaps aligning more closely with industry norms, while it doesn't give us profit numbers today. It is a strategic move that signals a desire for smoother financial reporting and better comparability with peers. It is a step towards what they likely hope will be a more straightforward understanding of their financial health in the long run. Alright, that is our take on FS Credit Income Fund's fiscal year realignment. What do you think this change signals for the company's future reporting and how investors will view their performance? Let us know your thoughts in the comments below. If you found this breakdown helpful and want more straightforward insights into corporate filings, make sure to hit that like button and subscribe to the channel. And don't forget to join our Discord community, linked in the description for more discussions on these topics. Thanks for watching, and we'll see you in the next one.